Okay, so we're getting a lot of questions about the U.S. stock market. Is it overbought? Or is it this simply the beginning of a much bigger rally? We like to look at market sentiment as well as chatter on the internet, Facebook, Twitter, trading groups, that sort of thing, to kind of see where everybody is. And to be honest, from what we see, the majority of traders and speculators are still bearish, and the majority of long holders, buy and hold investors, they're still a little skittish. They don't trust this market, which is exactly when we like to play the upside, or at least look for higher prices. One thing that we really like to keep an eye on is the CNN Fear-Greed Index. This is, again, the CNN index. They basically take a handful of factors in the stock market, whether it's stock market breadth, put-call ratios, that sort of thing, and they determine whether or not there's extreme greed or extreme fear in the marketplace. And sure enough, what generally happens is when everybody is bullish, the market tends to roll over and sell off, and when everybody's bearish, it does the opposite. In December, you can see that we were sitting near extreme fear indicators, and what happened? The market rallied back. And that's because if everybody's already bearish, there's no one left to sell. If everyone's already bullish, there's no one left to buy. So you get that sort of thing. It's the exact opposite of what human nature tells us the market should do. So we see the CNN index hovering in the 65-70 area, which is quite a ways away from the 90 area, which is generally seen when the market gets a little too exuberant. You can see if you went and matched these circles up here of extreme greed to an S&P chart, you'd notice that most of those occur when the S&P is a little frothy. And again, it's just the simple idea that if everybody's already long, there's no one left to buy. The buying simply dries up. So at this point, we're looking at a reading of 65-70, and we don't think the buying is going to dry up yet. We think there's still more to go. The path of least resistance is probably higher. In addition to that, we look at seasonals. This is actually part of the best 6 months of the year, according to the Stock Traders Almanac. According to that service, February is a little bit shaky, but overall a positive month, and we should continue to see the market go higher through April. MRCI has a similar conclusion. This is a chart from MRCI, that's More Research Center Incorporated. They suggest that the March futures contract has a history of moving higher from roughly mid-February through the end of the contract life, which is mid-March. So if that's the case, we're probably not going to get a significant sell-off, at least in the short run. Looking at an S&P chart directly, we're looking for about 2,800. If you would have roll your timeline back a couple of months before the December fiasco, you would have seen that the market was basically trading in a range between 2,800 and 2,600. So 2,800 is really the top of that trading range. In our opinion, it probably should have never dropped below 2,600. That 2,600 plunge that brought us all the way down to roughly 2,300. It happened really fast, a handful of days, and it didn't last long. The market reversed sharply and came all the way back. Sometimes crazy things happen during the holidays. The volume's light. There's not a lot of people trading, or and there's air pockets. Crazy things happen, and we think that was just simply a crazy thing that happened but shouldn't have. Last year we had something similar, but in the opposite direction, and it came a little bit later, and it came in January last year. But anyway, we just think that was a seasonal move that just got out of hand, and here we are. We've basically taken back almost all of that December sell-off, and now we are approaching the 2,800, which was the top of the previous trading range, and will now be the new resistance. It seems like we're going to get 2,800 whether or not we get any type of progress in China. However, to get above 2,800, we're probably going to have to see something, at least some sort of concrete deal between the U.S. and China, or at least an agreement on some sort of arrangement. So we'll have to see what happens when we get there, but 2,800 should be a relatively easy target to achieve, and if we can break above that, believe it or not, we think 3,000 is possible. If you look at the trading channel here, 3,000 is the top of the range, and it's not impossible. I know it seemed impossible a few months ago, And it might even seem impossible today, but that is a really realistic target. In our estimation, and this is a guess, we all know speculating is guessing, but we think 3,000 there's roughly a 35 to 45% chance that 3,000 is seen in the first quarter of this year. So let's see what happens. Again, we're DeCarly Trading. We are a futures and options brokerage service. We'd love to have you on board, or if you're interested in learning more about trading in futures, you can visit our website. You can sign up for free newsletters. We offer trading recommendations, commentary, guidance, that sort of thing. We offer anything from full service to discount online trading. And if you want to learn even more about trading futures and options before you get involved, which is generally a good idea, an educated trader is probably a much better trader. Not probably, it is. You can find my book, Higher Probability Commodity Trading, at any bookstore, but it's cheapest on Amazon. Thanks for giving us your time. If you have any questions, feel free to contact us.